going on, guys? Throwing together a quick update video. Another choppy day for AMC. Not surprised. We're still looking for $10 plus. We're going to see $10 plus. It's just a matter of when. We're just chopping in this range as we should be, and we're looking for the move out of this now, which would lead us to January 15th to complete the macro from which we gap up and squeeze. I'm also going to be talking about SPY today. SPY has just been getting absolutely fucking thrashed this week. And no, the market is not crashing. I know, there's probably a bunch of people that think that right now that the market's crashing. It's not crashing. It's playing out the symmetry as it should. So we'll start with SPY. And this is the symmetry chart on SPY. The blue box is the middle, your lowest low here. You have one poke above this resistance line at 418. It's really just a fake out. So this is the middle, the initial cup. From there, you come down, break below this horizontal line at 380 on both sides in the red boxes, up to 418 on the dot on both sides where you reject, and then down to 380 on both sides where you find a bounce. Perfect wick off of 380 in the green. The climb up to 460, the climb up to 460, and the rejection at 460. I mentioned a few times on the way up here when we eventually did get to 460 because, I was saying the move is symmetrical all the way through this and we're looking for 460, this landmark here. And, when I was covering SPY every day, I was mentioning on the way up here that when we did hit 460, I wasn't really too sure how the movement would play out. Maybe we would continue climbing to the upside. It was also possible that we pulled back and just continued to play out the symmetry perfectly. And that is the case. So rejecting 460, coming down to retest that white trend line 418 on both sides. So here's your retest over here. Wick through it a little bit, and the retest over here a little bit higher. Bounce up to this yellow box here. This dotted line straight across is right where we bounced up. Perfect touch points. From there you reject, and then this wick comes down to 410. And I mentioned in one of my videos a while ago that 410 was on the table symmetrically. This had to have been at least a month ago. I mentioned this. I did say that I didn't think it was likely, but the touch points of the symmetry are perfect. And here we are coming down to the 410 landmark for SPY. Did not touch the trend line perfectly, but it's very possible this was the bottom here. It's very possible this is the bottom. It's possible we get the rest of the downside tomorrow to 410 and reverse there. But I am expecting that the downtrend on SPY has now come to a conclusion. Whether we come down to 410 or not, this is the bottom for SPY. So what we're looking for now is a bounce out of this roughly up to 450, and then potentially one more pullback to 420 before we get the all-time high movement. So that is pretty much it for this. This looks great. Every touch point through and through here is perfect. Blue box is the lowest, the red breaking below this horizontal line at 380 on both sides. The green box is bouncing off of 380 perfectly, rejecting 418 perfectly here. The three touches on 430 in the purple circle. The cup and handle in the green, the 460 move, the bounce off of 420 here that you see here, the bounce up to this yellow box off of that, which runs straight across, same touch points on both sides, and then the 410 wick, the 410 landmark is what we're checking off right now. So it's great. One other thing, and this is just further confirmation that the bottom's in. So on the left, what we're looking at here is all-time highs on SPY and the descending broadening wedge, the movement that we got. And on the right is the downtrend that we're currently going through from that rejection at 460 that I was just talking about. So I'll just show it really quick. We're looking at this downtrend from all-time highs to this bottom wick right here, compared to the rejection at 460 to this wick here, side by side. So here it is. So all-time highs coming down to this yellow circle here, bouncing up to this green box, coming down to this yellow circle, bouncing up to this green box, fall down even more to the green circle now that you see here, bounce up, another rejection indicated by the red arrow, coming even lower now, and then drawing a horizontal line on that touch point on both sides, bouncing up into the red, which is higher than the red arrow, the red box, higher than the red arrow, and then more downtrend, break below that horizontal line, bounce out of it, break below that horizontal line, bounce out of it, and then you fall through it. And then over here, same thing, falling through it. This is it. The bottom's in. Bottom's in for SPY. You know, it's possible we come to 410 tomorrow and really just check off that touch point that I previously mentioned here. This touch point here at 410, it's possible because we didn't touch it. We bounced a little bit above it. I think it was 412. So it is possible that SPY tomorrow comes down to 410, maybe after hours today, into pre-market tomorrow, and then just upside from there. But this is it. This is the bottom for SPY. Expecting this uptrend out of it now. So it looks great. Getting into AMC, starting with the macro perspective from IPO once again, January equivalent in the green, January equivalent in the green, June equivalent in the yellow, June equivalent in the yellow, V-shape, V-shape, macro break in the blue box, and then the descending wedge, green, red, blue, green, red, blue, drop to the flat portion, play out the flat portion. I mentioned in my video yesterday, it's possible that what the flat portion is just a reset pattern for the algorithm into a bull cycle. After just, continued downtrend, you just get into this reset pattern, the flat pattern. It's possible what this is just a reset pattern for the algorithm heading into a bull cycle, which is what we're looking for anyway. Looking for a squeeze and a new bull cycle on AMC. Also, the point at which the wedge meets, the support and resistance of the descending wedge meet on both cycles, is your third bottom all-time low landmark. And we have once again come down to this macro trend from IPO and bounced off of it. This looks great. And right now we're in that choppy pullback iteration from the third bottom. And once again, this trend is meeting zero pretty much at the new year. So in my opinion, we're looking for a squeeze. This trend will be irrelevant going forward. It's either that or we go to zero, and we're not going to zero, so we're squeezing. That's that. Now getting into the flat portion now. This is updated. On the left is the 2021 cycle. On the right is the current cycle. So coming down to your first bottom, choppy, gap up, double peak move down to your second bottom, which is a higher low in the daily. And over here, same story. Coming down to your first bottom, choppy, gap up, double peak move, coming down to your second bottom, higher low in the daily, the tri-peak, and then your third bottom all-time low landmark, which is where we are now. The uptrend off of it, the pullback here, the chop, the uptrend off of it, the pullback, the chop. And now we are looking for January 15th, this candle right here, which is the end of the macro, from which we gap up and squeeze. And that January 15th candle will likely be taking us to $13 to $14 to complete the V, which once again is an inverse head and shoulders. Here's your left shoulder, here's the head, and now looking for the rest of the right shoulder up to $13, $14, which will complete the macro, checks off January 15th. And then from there, we gap up into our squeeze, more than likely gapping to all-time highs overnight. So date range updated once again. On the left, from the beginning of the flat portion until your peak, January 27th, was 342 days. Current cycle from the beginning to today is 329 days. We are now 13 days away from being 1-to-1. And that 13 days away lands on November 8th earnings. So that looks great. Zooming into the third bottom all-time low now. And here it is. And I've been posting this, covering this in my videos, the tracking here. So here's coming down to your third bottom all-time low, the cup out of it, green circle, coming down to your third bottom all-time low, cup out of it, green circle, poking above this dotted line on both sides. The pullback underneath, choppy W, pullback underneath, choppy W, the reclaim in the yellow, which is lower than the green, reclaim in the yellow, and then the rest of the move up to the top where you reject, come down, and bounce on that dotted line. Chopping, establishing support. We're now on episode 6 of the Chop series. Chop part 6 today, and AMC is just continuously chopping around here, getting very tight. There's not a trend line here, but you could see the trend, the descending trend here. This is getting very tight, and the movement out of this will be the uptrend to January 15th, which concludes the macro. From there, you gap up, and that's it. That's the end of the macro there. So that's that. Now I want to talk about, this is probably my favorite chart right now. And I haven't showed this yet in one of my videos, but I posted it in Discord a couple times and I'm really quickly going to go over it again. So what we're looking at here is the final iteration. We're looking at the January 2021 final iteration, the W with the tri-peak that leads you to the squeeze compared to the current. And granted, this is a little bit skewed because of the third bottom all-time low, but this is the start of it, the W, the tri-peak, and now coming down to the right leg of the W, looking for the squeeze now. So looking at this side by side and running a trend line from the top of the left leg down over your first peak of the tri-peak, straight down, pretty much rejecting right here at the chop zone. This January 15th move actually breaks you out of the trend, and then that's it. That's the gap up. That's the end of the macro there into your squeeze. Over here, same thing, running this from the top, the left leg of the W, right down over your first peak of your tri-peak, straight down. You actually reject right off this candle right here, and where we came up and found a rejection to come down to the chop. And as I mentioned, this zone here, this chop zone is getting very, very tight. The candles here are getting compressed down, pinching into resistance. And when we break out of this trend, theoretically, that will be this January 15th move right here, up to $13, $14. And once again, that's the end of the macro. And again, you know, this is the macro V, what we're looking at here, the inverse head and shoulders, the left shoulder, the head, and now forming the right shoulder, looking for the curl up to $14. That finishes the V, completes the macro, checks off everything else, and looking for a gap up there into our squeeze. So this looks good. Here it is again, just with the 20 EMA. Just showing you the 20 EMA is perfect as well, and it also meets you there at that trend where you're fighting at this chop zone for the 20 EMA is where we are here. So I figured I would just throw this in as well. Really not too relevant. Now getting into the actual, not the tracking, but the symmetry of this move, and I mentioned multiple times, we're playing out the same iteration that we just played out underneath us. So coming off of your third bottom all-time low, and then the pullback and this chop zone before we got the breakout in that 2-week bull run, we're playing out the exact same thing. It's just a big cup. It's a cup, and it's just a very symmetrical, choppy, sideways move until you break out, and then you go. And on the right, here it is. Here's the cup, a very symmetrical, choppy, sideways move. We broke the trend. Retested yesterday and the day before. Today, wicked a little bit lower, but pretty much double bottomed it, bounced off. It looks great. Still, we're looking for this upside move, looking for that 10 plus landmark, and looking for the rest of the upside to $13, $14. You know, it is what it is. Another chop day, chop part 6 now. Still, we will be breaking to the upside here, and we will be heading into that $13, $14 range, which is January 15th and the end of the macro. So this looks great. Really quickly, in case anybody forgot, every day is January 15th, and here's the side-by-side, the 1 minute versus the macro, 3 years of price action versus not even 1 day of price action here. The W in the yellow, your first peak, January equivalent that you see here, the pullback, ascending W, pullback, ascending W into your June run, the flag, and then the downtrend. Downtrend here, 4 touches on that top trend, halted every single time we touched this trend, and then knifing into your V. And again, the V is more or less an inverse head and shoulders. This is a 1 minute chart, so I could show it like slightly here, but this is the left shoulder, the head, and then the right shoulder before you get the rest of the move up to the top of this move, which from there you gap up over the range, your micro fractal break. We're looking for the equivalent over here. This is not updated, by the way. It's missing this week's weekly candle, which is irrelevant because we're just sideways here anyway. But we're looking for the rest of the move up to this $13, $14 range to check the rest of the V off, from which we theoretically gap up our macro fractal break, which would gap us over the entire range. And again, you know, I mentioned this in inverse head and shoulders, and you know, here it is. Here's the V. Left shoulder, left shoulder, head, and now the right shoulder's forming and curling to the upside here. That $13, $14 move will be January 15th. That's the end of the macro, and it also at the same time will check off touching this trend here, $13, $14, which is this candle here, and that's it. Gap up, sayonara from there. And then I think that was it. And here it is just zoomed in. So here's all your touch points. 1, 2, 3, 4 off the top trend. 1, 2, 3, 4. Again, this is a 1 minute chart versus 3 years of price action on the right. Your 3 bottoms here, your 3 bottoms. From your 3rd bottom, you find a bounce up to the trend, reject, form a higher low, and then reject again. So up to the trend, reject, form a higher low, up to the trend, reject again, knife, knife, and then you play out the V, which again is an inverse head and shoulders. So this looks great. Price action for tomorrow. It's possible we chop all day again, you know, which don't be surprised if we do. It's not a bad thing. I know it's annoying. Trust me, I know it's annoying, but it is what it is. You know, chop part 6. Maybe tomorrow will be chop part 7. There also is a scenario, and before I say this, this is unlikely. This is an unlikely scenario, but it's a scenario, so I'm going to mention it. I don't think this is the case, but it is a scenario where tomorrow we might actually get January 15th. I don't think we're going to, but it's possible that tomorrow we get the January 15th move, break this trend, as this was on Friday as well. This was on Friday as well. And next week, October 31st, is 7 days post OPEX. So January 15th, gap up, you know. Again, I don't think that's the case. I'm just pointing that out. More than likely, the way this plays out, like I said previously, is when we break this trend, we just see upside, the way we saw here. This upside here, when we break this trend, the same thing, bringing us to $13, $14, which would take all next week and I think Monday, Tuesday of the following week into earnings, November 8th, which is 1-to-1 with the flat portion, the date range. So that's it. That's it for the video. Another boring, choppy day. Not surprised. And that's it. Tomorrow, don't be surprised if it's another boring, choppy day. Don't be surprised if we wick a little bit lower than we did today. And if we get upside, great. If we break 10 plus and we start moving to the upside, great. Chop's done. Once we break out, once we get that move 10 plus, that's it. Start the uptrend. More than likely, you know, tomorrow being Friday, more than likely we won't be breaking out tomorrow. It'll more than likely start next week, but still, you know, we'll see what happens. So that's it for the video. I think I covered everything I wanted to. The market is not crashing. We're just checking off this landmark here. I went over the side-by-side, all-time highs down to the reversal point versus 460 down to where we are currently. Same exact movement. Fractals are fractaling. AMC, chop is chopping. The macro looks amazing. The flat portion looks amazing. Again, we're 13 days away from being 1-to-1. And that's pretty much it. Zooming in, it looks great. We're chopping sideways here as we should. Chop is chopping. And we're looking for this trend break, which would theoretically be starting the uptrend, the beginning of the uptrend to $13, $14, which would be completing the V here, coming up to this trend at $13, $14, which is the end of the macro, from which we gap up into our squeeze, potentially gapping to all-time highs. And if it does end up lining up with earnings, you know, gapping up to all-time highs, it would probably have to be some pretty crazy news, and not Taylor Swift or Beyonce or popcorn. It would be something serious. That's it. And again, you know, we're playing out the exact same thing that we played out right underneath the range below us. All this movement here, this chop sideways for 2 or 3 weeks, whatever the fuck it was, we're playing out the exact same thing and looking for the climb out of this, the other side of the cup here, which will be the completion of our macro, January 15th. That's it for the video. I will more than likely be catching you guys with an update video tomorrow. It'll probably be a quick one. That's it.